Hello, Maverick traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. This is the Currency Room for the first week of September. So August trading is officially closed. I know we closed the books late last week. We did payouts today, which is always fun to pay our traders out. Next week, we'll be doing level advancements. And then, as always, the market doesn't care what you did in August. It doesn't matter if you had a great month. It doesn't matter if you had a bad month. It doesn't care. It's a new month. And even if you killed it in August, guess what? The market doesn't care. You still have to get it right this month. So we have to just make sure that we stay disciplined, stay true to the market. And as always, as we talk about Maverick, trade the market in front of you, not the market you want it to be or think it should be. Just trade the market in front of you. So let's talk first about fantasy football. It is fall, and we started this 8 years ago at Maverick Trading. I was never a fantasy football guy. I was the guy that made fun of fantasy football guys. And we started it up, and I said, okay, whatever, I'll play. I am now so into this. It's embarrassing. It's embarrassing when I have to tell people, I'm sorry, I can't do anything with you this week. The draft is coming up. They think it's like a military draft or something serious. I'm like, no, it's my fantasy football draft. So look, this is our 8th annual Maverick Fantasy Football. All of our traders, you already have invitations in your email. Look, if you don't know what it is or you don't care, just ignore it. Just ignore it. We'll have our nerdy fun. And I always have to share this story. I was trying to explain to my wife what fantasy football was. And she finally said, oh, so it's like Dungeons and Dragons for jocks? And I thought about it. I'm like, yep, that's what it is. So there we are. This is D&D for jocks. So if you want to join us, please do it. We always have 2 sporting events every year. We've got fantasy football through the fall, and we do a March Madness tournament at Maverick as well. Grand Champion, I think we have 8 leagues set up. So join one of those leagues. The best record and most points, it will be the Grand Champion. We'll get a $300 Amazon gift card, and all the league winners will get a $50 Amazon gift card. If you don't care about this, then let's just move on. We'll all have some fun without you. That's fine. Let's talk about last week. So last week we said we thought the market was going to drop about another 1.5%. It actually dropped closer to 2.5% to 3%. So this is the 3rd consecutive down week. And we are now trading below the 50-day moving average. That is our line in the sand at Maverick, the 50-day moving average. This is where we go to a overly risk on or a risk off bias, and we're definitely now tilted towards risk off. The dollar had a nice run last week, and crypto's actually rallied a bit. But look, it was nothing more than a bear rally, nothing to get excited about in cryptos. If we take a look at our economic events last week, we had a preliminary CPI out of Germany. You can see came in as expected. We got lots of jobs numbers out of the U.S. If you take a look at the U.S. employment report, basically came in right as expected. But look at that unemployment rate. It actually ticked up 0.2%. This is the first month I can remember since the pandemic that the unemployment rate actually ticked up. Now, equities rallied short term on that, thinking, oh, the Fed's not going to be as aggressive. But then they gave up their rally on Friday and ended up down. Other than that, not a whole lot of information out there that we got this week. Usually the last week of the month is the least busy for economic reports. So let's take a look at the charts from last week, and let's get a good idea of where things are going this week. So if we take a look at weekly performance, the S&P down 2.79%. The VT, the world index, down a little bit more. As you can see, crypto had a bounce. Crypto had a nice little bounce, which is actually fairly surprising as cryptos have been highly correlated to the S&P. When the S&P goes down, they've been going down along with it. This was 1 week. Like I said, I don't think it's anything to get too excited about. Things are still in a pretty big downtrend in crypto, but we'll keep an eye on it. And if it does strengthen, we'll go ahead and go long it when the charts say to. Gold and oil also had a down week. Oil now trading below the $90 area. So let's take a look at the S&P. Now we talked about once we broke this 40-80 on the S&P that we were likely headed down to the 50-period moving average where there is some more support down in here. Now you can see on Thursday we actually came down to that level, hit that level, gave a nice hammer, and actually closed up for the day. That was a nice reversal candle. Now, every reversal candle needs a confirmation candle after it, and Friday's candle failed miserably. That is a big failure. And whenever you get a reversal and a failure, it tells you it's going lower. So this support here, right around 39.30, to me, it looks like it's going to be broken. And then the next level is all the way down here to about 38.40. So we do see some more downside in the market. The fact that Friday's candle did not confirm Thursday's bounce just tells us the market's not ready to go up yet. So at this point, we are below the 50-day moving average. That gives us a bearish tilt in our equity outlook, which means that we're looking for more risk-off movement in currencies. So in risk-off movement, you would expect to see the dollar, the yen, and the Swiss franc do better. Well, one of the three listened to what should have happened. As you can see, the yen did not participate. But look, we've talked about the Bank of Japan and what they've done to just kill the yen. The yen has been killed off and has not acted like a currency of safety really for the last year and a half. Swiss franc sold off a bit. Euro really took off. Now, we had some news out of the Eurozone that ECB members want a larger rate hike coming up, probably a full 1% rate hike. And the euro shot up and was very strong all week on that news. Now, I suspect that the Swiss franc is down because right now the euro and the Swiss franc have been very highly negatively correlated. So if euro got pushed up, then Swiss franc naturally got pushed down. To me, the big story of the week is this pound. This pound is really, really looking bad. And this was a nasty week for pound. I know we call for pound shorts at the beginning of the week, in the middle of the week, and at the end of the week. We liked pound dollar as that cross. And I know we had a lot of traders in pound dollar this week, and it was a very, very nice trade. Other than that, you can see the CAD was up a little bit, Aussie down a little bit, Kiwi up a little bit. I'm not going to read too much into it, but to me, the real story here is in dollar, euro, and pound. This is really where the story is right now. If we switch over to cryptos here, we've been talking about how we like Ethereum. If you are going to go long cryptos, we've talked about being long Ethereum. And look, it had a nice jump. Litecoin did a little bit better. But remember, Ethereum did a lot better on the way down than Litecoin. So over the last month, Ethereum has been the clear outperformer. But look, we'll take a look at all these charts here on crypto. Cryptos still don't look great. We need to see them go above 50-day moving averages to sustain uptrends. We're just not seeing that right now. So let's take a look at our market scoring system and see what we've got. Now, last week, we were at a 0. Last week, we were sitting between the 20 and 50-day moving average, which is no man's land. One was sloping up, one was sloping down. And so look, we were just at a 0. This week, we have seen that the S&P has broken. We broke down below this 20-period moving average, broke down below the 50, and now we can see we rallied back up to that 50, hit our head on it, and we've come right back down. And so when you take a look at our scoring system, we are clearly below the 20. We are now below the 50. The 20-50 slope, the 50-day moving average is still sloping higher. So we're going to have to downgrade this market. I'm going to go to like a 1.5. If it gets a little bit worse, I'll go to a 2, but this is still moderately bearish in the markets. So that's what I'm looking for, moderately bearish action in the markets. Let's take a look at the VT. This is a world index, and you can see that it didn't even rally up to its 50-period moving average. At least the S&P rallied up to there. It didn't. And you can see we are already below this little swing high in June that held here. We're below that. This is just not looking good for world equities. And I think world equities are going to really come down and test those June lows. Just look like June lows are coming down here. Anka, what's your call here on equities?
Well, I do think the markets definitely have more downside risk over here. I think that big rally that we saw the last month has failed miserably. I mean, this is something, it's not a good sign. Whenever we see these kind of rallies, the big test comes when these pullback comes. When we see a almost a full retracement back to the lows here. I think this is where we are heading down, and we've seen the same kind of price action in cryptos. They gave up a majority of the gains. So I think what we have seen play out this summer is a very massive bounce. But those bounces have been just nothing but shorting opportunity. So I think overall, if we take a look at the way the markets have been acting this summer, we are now looking pretty awful for the next month, where traditionally September is where we see most of the big negative months comes in September. So the fact that we are looking this terrible on these charts, I think is setting up for a lot more trouble on the downside. So personally, I think this is a good opportunity to be on the sideline or be on the short side, but I'm not really looking to see or add on to any on the upside, because I think markets, the deterioration is kind of increasing in the markets here. So a lot more downside risk than the upside potential here.
And I totally agree. And we've been warning over the past 2 weeks about the September effect, how September is the worst month of the year traditionally, and the most crashes have happened in September. And you're right, Ankit. These markets are looking really shaky going into September. That probably means we're going to get a shaky September. So let's take a look and see what is on the schedule for next week. We do have some central bank stuff going on. We actually have 3 central banks next week. We've got the RBA on Tuesday night. Again, that is actually Monday night. That is Tuesday at 12:30 a.m. Eastern Time. So remember, that is Monday night. We typically meet live for the RBA rate statement, but because Monday is a holiday, we're going to give our staff the night off so they can enjoy it with their family. So we will not be meeting live for the RBA rate statement like we usually do. The RBA is expected to raise rates by 50 basis points to 2.35. We do have the Bank of Canada on Wednesday, and they are also looking to make a raise, and the expectations are for a 0.75% raise from the Bank of Canada. And then, as you can see, we hear from the ECB, expectations are for 0.75, but we've had several of the governors come out and say they want a full percent. I think that the ECB has the most chance of surprising the market. Look, it's pretty built in. The RBA is very highly likely to go 50 basis points. The Bank of Canada, very likely to go 0.75. That's really not in question. What is in question is the ECB going to be 0.75 or is it going to be a full 1%? That tells me that the euro has the most opportunity to have a big move next week because it will be the most unexpected. So we will be meeting live for the ECB rate statement as usual. We'll be meeting for the ECB press conference a little bit later after the rate is announced, where we're going to meet live as Maverick traders. We're going to trade that live. We're going to look to make some pips off that move. And I think that is the big move of the week. And then on Friday, we do have Canadian employment report. So if you are trading the CAD, big week for the CAD as well. So just looking at the schedule, I'm looking at this thinking, boy, Euro and CAD look really juicy this week for big moves, and I definitely want to be hyper-focused on those. So this week, we've got bearish markets, we've got 3 central banks, and we think the ECB is the big one this week. And then Friday, Canada employment report could also be a big one as well after we hear from the Bank of Canada on Wednesday. So let's take a look at some of the currencies. We're going to score all the currencies, see where they sit, and really build our game plan for what we're hunting this week. Let's start off with looking at the crypto outlook. Let's take a look at Bitcoin. And you can see, Ankit, you mentioned earlier, we had this nice little uptrend off of the bottom. It was simply a shorting opportunity because we broke down here. We talked about how cryptos were no longer in play. You could no longer buy cryptos here. We dropped, we based, we dropped. Here we are basing again. Look, there's no reason to go long here in Bitcoin. It's down below 20,000, likely going lower, and I think we could retest where we put in lows in June, which is right around 18,000. So no buying of Bitcoin. We come over here to Bitcoin Cash. Look, it's trying to hold on to some support here. It's trying, but again, the uptrends are over. We talked about how the uptrends are over. We're breaking down. No reason at all to be long these. No real reason to be short these at this point either. Ethereum is our favorite. It's actually at its 50-day moving average. But if you take a look at the pattern, it's just been a big drop and then a moderate rally. Big drop, moderate rally. The big money is in the big drops. So we think this is likely going to break down and possibly go back and retest this major support here at 1,000 on Ethereum. Look, we like Ethereum most of all, but we don't like any of the cryptos. You can see Litecoin, only crypto we can take a look at that's actually trading above a 50-day moving average. But again, as a trader, we're trying to look and see the things that have a lot of momentum, a lot of room to the upside. We've got a whole bunch of overhead resistance up in this area. There's just a whole band in it. I don't want to play until it breaks above 65. That's going to be the entry point on Litecoin. Until it gets there, I'm just not interested. So cryptos, they're on the shelf right now. Let's take a look at the foreign currencies and see what looks good. We talked about how good dollar's starting to look again. So we had a base here, we had a breakout early in the week, and the dollar had 3 very, very strong days. Tuesday, Wednesday, Thursday, where again, a lot of our traders were long dollar and it turned out to be a really good trade. Okay, so we have run up. We're right up at this upper point, this yearly high that we made back in July. Okay, so I think we probably have a little bit of work to get through this area. We are seeing some basing here on the short-term 4-hour chart. It could pull back all the way back down to this base here and have no problem. This is still a big, strong uptrend to me. Anka, what's your call here on dollar?
Hey, Rob. Well, I think dollar is sitting at this very interesting juncture here because there's a lot of things that are actually going for the dollar. I mean, the first thing I want to point out is the ultimate risk haven currency. I mean, if you look back in the past, we used to have the dollar, we used to have the yen, and even sometimes the euro used to take part in that risk or safe haven currency. I mean, if you look at right now across the board, I mean, there's nothing out there that's acting as a safe haven currency. So I think it's the ultimate bid where things go wrong, the dollar gets lift. And now on the top of that, we have a very aggressive Fed as well, which is now wanting to raise rates much more on an aggressive path. And I think that's just fueling that fire. So I think if you really look at it, unless say there's another currency that comes in and start acting as a good safe haven currency, I mean, I think ultimately this is the last resort. So whenever you see a situation like that, I think there is just, I mean, right now, I mean, we look at this, we see a double top. I think we're still setting up nicely to even break out higher. Again, we're looking at this currency basket. I mean, we are making new highs, very shallow pullbacks. So I think we will continue on this path. And especially now, if you're looking at a terrible month of September, I think you just have to be very careful and not get in the way of the dollar. I think dollar has more upside potential than a downside risk. So that's how I look at it, Rob. The dollar, I think I'd like it more further to the upside. Pullbacks, looking to buy those dips instead of looking to, the dollar to the downside, unless something materially changes in the markets. I think until then, we just need to stay on the one-sided, only to trade it on the upside in the markets.
Thanks, Anka. And one of the reasons I think the dollar looks so good is because other currencies look so bad. Now remember, whenever you're trading currencies, foreign currencies, again, in the stock market, people can sell stocks and go to cash. In real estate, people can sell real estate and go to cash. We are trading the cash market. You can't sell cash and go to cash. That doesn't work that way. We're at the lowest common denominator. And so the cash is just going to go somewhere else. So if people move their money out of the US dollar, they have to move it into something else. And so it's this real game of relative strength that we keep talking about with all of our traders, why this is so important. So right now, again, the yen is typically a place where people go run and hide in times of economic stress. The Bank of Japan has destroyed that. People are no longer looking at the yen as a safe haven. So all the money that would have gone to yen has to go somewhere else. And then it goes and looks over at the Swiss franc and says, well, let's take a look at the Swiss franc. And you can see the Swiss franc is so-so. It's not going anywhere. So yes, the Swiss franc is getting a little bit of money, but the money is actually leaving the Japanese yen. So the reason I like the dollar so much is that we have these two currencies that traditionally get lots of money flows in times of stress. They're broken and people aren't running and hiding there. So all of a sudden now you've got an even more concentrated position being taken in the dollar where people are looking around saying that's really all there is. So the yen here looks broken, and on any rallies in the market, you want to be short yen. We saw one day of a rally last week on Thursday, and it was actually one of the better trades of the week to be short yen and to be long anything else against it. So I'm looking at yen as only a currency to short, and only a currency to short on up days in equities. That's the first thing that's going to pop in my mind. If I see a bounce in equities, a nice rally, I'm thinking short yen right away. Swiss franc, on the other hand, it's not as clear. We tried to have this breakout. Swiss franc tried to break out, and it just didn't have any oomph behind it. So we're just right back in here in this level. It's a 0 for me. I'm going to put Swiss franc on the shelf, and I'll come back when it actually wants to move somewhere. The recovery of the euro is actually pretty impressive here. We have been going down and down and down. I could go further back on this chart. The euro has just been in a long, long downtrend this whole year. We finally bottomed out, and we had really strong moves to the upside off of the statements from some of the ECB members. So here is the big question. Was that the bottom of the euro? Was that the ultimate bottom of the euro? And from here on out, it's going to start to go higher? Or is this nothing more than a bear rally to be shorted? I don't know the answer to this. One of the things that makes me say that maybe that was the bottom was that everything else looks so terrible. We're going to take a look at the pound here next. The pound is going to hell. The pound is really looking bad here. Yen's looking bad. Where else is the money going to go? Anka, what do you think about euro here?
Hey, Rob, well, I think you're right on point there. This is a good question, and I personally don't think that the troubles are gone away from the euro. I mean, maybe it's just getting a shorter term lift. Maybe this is fueled by some speculation that they will raise rates. But I think if you just look at a broader scheme of things, I mean, euro is still below parity against the US dollar. So I think it's all relative basis. Euro is getting a lift, but now comparing that euro to the dollar, it still look terrible. But now comparing euro against the Swiss franc, we actually seen a bit of very nice recovery there. So I think it's every currency just getting a little moment of shining for the shorter term, and it just kind of goes away. And that's just the nature of the markets right now. I think this is combined with some of the holiday trading that we've seen this week. I mean, very exaggerated moves one way or the other. I'm actually very interested to see when the liquidity turns back to the market next week. I'm actually looking to see where the big money actually goes, because so I think that's where we don't need to be looking at this and say, well, this is the ultimate rally. I think what I would love to see is a second stage entry where it does correct, make a higher low, and actually goes with a higher high. I think that would give me more confirmation that this thing is turning around. But until then, I think this week has been a great example where one currency got hammered, the other currency actually did not. So I'll have to wait for a little bit more confirmation next week. And again, we have the ECB next week as well. So we'll have to see post that ECB press conference, does the euro continue to stay elevated? And I think that will set the tone for the euro for the rest of the month.
I think that's a great call. I think by Thursday, we'll have the answer to the question of, was that the ultimate bottom in the euro that we saw just 2 weeks ago? Let's move on to pound. So again, let's quickly on euro. I know I am waiting for euro till Thursday. I'm not going to make any euro trades before that. I'm going to wait till Thursday, then I'll make some euro trades later in the week. Pound here just looks terrible. Last week we said the pound was our favorite short, and this thing went down every single day. We broke down below this little base, and the pound just marched down a little bit every single day with some intensity more at the end. So the pound looks awful here. Now remember, whenever things get a little stretched, we are stretched far away from our 20-period moving average. We have to start thinking about, okay, there's probably a short-term rally in there somewhere. But if you were going to trade pound right now, you have to be short. You have to be short. That's where it is right now. And we've seen red candles for 20 candles in a row before in currencies. That happens. So you want to be short, but you have to be understanding that there is likely to be a bounce somewhere here over the next week. But on any bounce, pound looks like a sell 100%. Any rally we get or any base we get, you want to sell into that on pound. So I still like pound short quite a bit. Going to the CAD. Boy, CAD has just been nothing. It's just been stuck in this range. We've tried to break out. We've tried to break down. It can't do anything. It looks pinned here. So I'm going to put CAD just a solid right in the middle. It's not the best currency. It's not the worst currency. I'll check in on it on Wednesday when the Bank of Canada comes out with their rate statement and their guidance going forward. But I'm not doing any trading on CAD until I see a movement from the Bank of Canada. And look, and if it breaks the Canadian dollar higher, I will gladly buy it on Wednesday, Thursday, Friday. I doubt it's going to break much lower. I mean, down below the support, that is pretty far away. And if it does, I can take a look at it as a short. But until we get some news, I am not looking at all to be active in the Canadian dollar. Aussie is a pretty interesting one here. So here we have this risk-off move that we really started 2 to 3 weeks ago. This is about where the risk-off move started, right here. And take a look at Aussie has actually held in quite well. We're trading in this trend line. Every time we get down to the bottom of the trend line, it's bounced higher all the way up to the top of the trend line where that was it. Looking at it here, we had a big long upper shadow here on Friday telling us, okay, well, it tried to bounce and it lost all of its rally, but it's still holding these levels. I am open to buying Aussie dollar next week. I'm open to it. It is technically in an uptrend. It's one of the few currencies that is in an uptrend, but I need to see it hold this bottom trend line. I'm going to need to see at least a candle, if not 2 candles of a bounce off this level. Then I'll go ahead and jump into Aussie. So Aussie is on the waiting list here, waiting for it to bounce off this level. If it does, I'll take a look at going long Aussie. I'm okay with that. There aren't many currencies that are showing strength here, and Aussie is one that's showing a relative amount of strength. When we jump over to Kiwi, we cannot say the same thing. We've talked about how much stronger the Aussie is than the Kiwi. The Kiwi's not doing anything at the moment. As you can see over the last 2 weeks, we've just been stuck between this range here. A breakout of each of these, I'm going to become more interested in trading Kiwi, but until that happens, I'm just not interested. So when we take a look at where all the trends match up, dollar is by far and away the best. Swiss franc is hanging in there. So again, if you don't want to be long dollar, I guess be long Swiss franc, knowing that you're really playing weakness in other currencies. The pound and the euro are by far the weakest, followed by the Kiwi. I think the Aussie, yen, CAD, I think you just don't look to play those right now. I think you just have to wait and see what those do. Euro, for me, is a wait and hold until the ECB. So it really comes down to pound and Kiwi against dollar and Swiss franc. If we take a look at our velocity scores, that euro is really cranking right now. And Onken and I talked about how that could be the bottom. Next week, we will be able to come in and say, hey, you know what, that was the bottom in euro. We want to be more long euro than short euro. Or, hey, that was nothing more than a bear rally. Let's go ahead and get back on the short bandwagon for euro and ride this thing down for another couple hundred pips. We'll see. So euro, looking good right now, but we're going to hold off on it. So what's moving right here right now is dollar's the strongest by far. And Kiwi here is looking to be the weakest at the moment. So Aussie in second place. I don't love that because, again, the Aussie has been holding in on the trend scores. So early on this week, for me, it's really Aussie and Kiwi is what I'm looking for.
Hey, Rob, as we take a look at the velocity scores and everything, I think the good call here is to really go in next week with a bit of a blank slate and see where things move, because I do think there has been, especially this week, there's been a lot of back and forth in certain currencies where one was shining at one point, one the other. I think as we go into next week, it's better to go in with a bit of a blank slate and see, okay, let's see which way things move, especially with these central banks that really are the one that moving these currencies, not these economic reports. I mean, they have very small impact right now, but as we go into some of the central banks, I mean, that's really where the movement is. So, I mean, the Aussie can actually go +2 and even go -2. I think it's better to kind of stay in the middle there, especially currencies that have a currency score of a 0 or even a 1, which means the trend is not that strong. And we can actually go either way. Now, if we go and take a look at currencies like pound, I mean, I think I really want to only play one side, which is, a -3. You want to be careful of playing the bounces because the trend score is so weak. So I think a general rule of thumb is that if you're looking at a currency at a 0 and a 1, you can kind of go both ways. We can look at Aussie as the best currency for next week or the weakest currency. But for those currencies that are sitting at those +2 or +3, I think I'm only looking at one way, which is dollar looking for buying the dips and the pound looking to sell the rallies. So I think next week will be an interesting week. I mean, Bank of Canada is due, and Canadian dollar will be the one that might be the next big mover. I think that's really where or how you should approach the market and just understanding what's likely to move and then stack your chips accordingly. So I think next week will be a great week as we get the liquidity to turn back to the market after Labor Day. I think we will have a bit of a different market price action compared to what we have seen so far this week. So I'm actually very excited for next week, and I think it'll start the week off on a high note there.
I also think tomorrow or next week's going to be a good trading week, but I do think it's going to be very news dependent. Again, we got Aussie, we got Canadian dollar, and we got Euro with central bank announcements. I think those are really going to push this market around, and that's where you're going to want to be trading around. So let's take a look at some possible trades. I'm just going to start off with really the only currency pair that I'm interested in at the very start of next week. We give daily updates. We meet all the time as a firm, so we're constantly updating this. But the only trade that looks sense to me right here, right now, is short Kiwi dollar. That's it, short Kiwi dollar. Let's take a look at it on the daily chart. So on the daily chart, we've had these bigger moves, but we had a move down here. We had a little bit of a rally here. We fell. Okay, this green candle here is saying, okay, for right now, this little move is likely done. I would love to see a rally up here to the 6160 area. 6160 would just be perfect. That's about 40 pips higher. I would love to see a rally up there. I would love to be able to sell Kiwi dollar up there. Now, if we don't get that rally, we might get something more like a base. And if that's the case, if we do low base here, then I think you want to be short here at 60.60. It's going to be really, well, let's call it 60.50. That's going to be the place where you want to be short. Early next week, I'm not looking to be super active because I think the action is really going to come Monday night RBA, Wednesday Bank of Canada, and especially Thursday. I'm really excited about the Thursday session. So I'm looking to make less trades early on in the week and more trades later in the week, but this is the only one that intrigues me at the first part of the week. What are you looking at early next week, Honka?
I think as I take a look at the setups, I do like to stack up the chips, like I said, around those news events. I think that's where the big opportunity is going to be. If you talk about dollar, I mean, dollar has, hit some these highs that we haven't seen for years. But then if you take a look at currency pairs like dollar CAD, I mean, we haven't really even tested the level that we were at before, I mean, going back to 2020. So I think if I need to see some things change, this is a currency pair that, again, looking at the potential, if there is a divergence that could take place, I mean, look at the 132 area that start to push towards and 134. I think there's a potential for this as well. It keeps fighting to the upside. I think if there is a news event that could be going the opposite way from the U.S., I think the dollar CAD is the one that I'm looking at as a potential, which slowly is carving its way out. I mean, we are now closing the week above 130, which if we take a look back, I mean, we haven't closed the week above 130. I mean, going back to 2020. So I think this is a positive improvement in the dollar CAD pairing. And if the CAD do turn out to be the weaker side, I think the dollar CAD could look really nice here on the potential upside. So I think it's all about, stacking up the chips on where you think would be the best pairing for the best and the worst case scenario for the Canadian dollar. Remember, the interest rates at these rate hikes are not going to have a big impact unless we have a positive, aggressive hawkish comments or commentary on their further outlook. So if their outlook is a little bit less hawkish, I think there's a chance for a little bit more correction, price action. So I'm looking at a similar kind of idea for both the Aussie and the CAD, and I'll be looking at those trades accordingly. So I think early on, that's what I will start with, Aussie and CAD, and I think later on that week, I think Euro. Rob, if you want to pull up Euro Swiss franc, looks very interesting to me because, we talk about these trends that had taken place. And Euro Swiss franc has been a great example that has been so diverged from one way or the other. If you take a look at the daily chart, I think it looks kind of promising in the fact that we actually have made this turn. I mean, we got above. We have been this very negative, this momentum starting June. I mean, look at that change there. And again, we're talking about trading that correlation. So the fact that we got, I mean, this today's candle looks ugly here, but it looked very interesting at a point where we got above the 50 as well. So I'm really paying close attention to Euro Swiss franc just so we can understand which one to follow, because I think at this point, either Euro is going to outperform or the Swiss franc. They both won't be outperforming at the same time, very similar to what we see with the dollar and the yen. So I think so far, you can see so far this week, we have seen a very nice up move in the Euro Swiss franc. So next week, as we roll by Thursday, I think this would be an important one to watch. And if we can actually get above the 98.50 area and try to get towards the parity, I think it could be an easy trade where we see a pullback maybe down to the 20-day moving average. We establish a higher low and try to make a higher high. I think that's the setup, Rob, that I'm paying attention to for a euro long, just based on that correlation there between the euro and the Swiss franc. But like I said, there's a lot of good euro setups. If euro needs to roll over, I mean, we have seen some rallies this week in the euro that could easily turn around as well. So I think the euro, like you said, Rob, I think has a good potential both upside and to the downside because the fact that we have already made a nice run going into next week. So that's what I'm looking at, Rob. But we'll be updating everybody throughout the week with the daily updates and the midweek, and update the outlook constantly as we get more information on the markets.
Well, thank you, Wonkit. Great analysis. Let's wrap this up. We are going into September. September is historically the worst month of the year. We've had the most crashes in September. I don't want to freak people out because most Septembers are just a little bit down. We've just had some really ugly ones. We had a 10% correction last year in September. We gave the same warning. And so it was really a good warning last year. This year, the market is already looking really shaky. And the fact that the market is looking so shaky, I actually feel a little bit even stronger this year to give the warning that, hey, let's just be cautious here. Now, what that means is there's going to be some great opportunity for us as traders, some great opportunity for us to be short some of the growth currencies, long the dollar, long anything else that's moving to the upside. So I'm not saying that, warning, don't trade. I'm saying, hey, we could see some very outsized moves here over the next 2 to 3 weeks, which we love as traders. We absolutely love it as traders. This week, there's lots of news events. We are going to be looking to place a lot of our trades around those news events. And as always, we follow relative strength and weakness. Everyone have a great Labor Day holiday. Be safe out there, and let's go make some pips in September. Thanks, everybody. Goodbye.